If you're a busy professional, juggling a demanding career and personal life, yet still trying to make smart investment choices, this video is for you. Welcome to the program Turning Things Around. Here I show you how you can reach the peak if you arrive in the stock market. I am Francisco and I'm an expert in finding stocks that can top the S&P 500. Today, we're talking about investing successfully despite a busy schedule. We'll explore practical tips that can help you outperform the market without spending all your free time glued to financial news. First off, let's set the stage. What do we mean by investing successfully despite a business schedule? Essentially, it's about maximizing your investment returns with minimal time commitment. It's not about getting rich quick schemes or risky day trading. Instead, it's about smart, efficient strategies that align with your busy lifestyle. First off, let's set the stage. What do we actually mean by that? Imagine maximizing your investment returns without sacrificing your limited free time. Sounds ideal, right? Well, that's exactly what we are talking about. It's about implementing smart, efficient strategies that fit seamlessly into your business lifestyle. No need to spend hours analyzing market trends or staying up late to catch international stock movements. Instead, it's about making your money work for you, even when you're not actively managing it. But before we get into the how-to, let's clarify what this theme is not about. There are plenty of misconceptions out there, and it's important to set the record straight so you know exactly where to focus your efforts. It's not about passive income myths. Let me explain. You've probably seen those ads promising unrealistic passive income streams, make $10,000 a week with no effort, or retire in 6 months by doing almost nothing. Sounds too good to be true, right? That's because it usually is. We're not discussing these unrealistic schemes that promise the world with zero effort. Real investing requires a foundation of knowledge and a bit of initial setup. While the goal is to minimize ongoing time commitment, there is no magic button that generates wealth overnight without any input from you. These myths often lead to disappointment and wasted time, which, let's face it, is the last thing you need in your already packed schedule. Instead, we're focusing on realistic strategies that require manageable effort upfront and minimal maintenance thereafter. It's not about high-frequency trading. This involves making dozens or even hundreds of trades a day to capitalize on minute-to-minute market movements. It's a high-stakes game that requires constant monitoring, advanced algorithms, and often significant capital investment. For busy professionals, this approach is impractical and unnecessarily stressful. You don't have the time to sit in front of multiple screens all day watching charts fluctuate by the second. Plus, high-frequency trading often incurs substantial fees and can lead to significant losses if not executed perfectly. Our theme steers clear of this. Instead of trying to beat the market on a daily basis, we're looking at long-term growth strategies that don't require your constant attention. We're talking about investments that you can set up, monitor periodically, and trust to grow over time without daily intervention. It's not about delegating all control. Finally, let's address the idea of handing over all your money to someone else without understanding where it's going. While financial advisors and investment managers can be valuable resources, blindly delegating all control isn't the solution. Why? Because no one cares more about your money than you do. Without at least a basic understanding of where your money is invested, you risk misalignment with your financial goals, unnecessary fees, or even falling victim to poor management. We're not suggesting that you need to become a financial expert, but having a foundational knowledge empowers you to make informed decisions and have meaningful conversations with any professionals you choose to involve. Let's start by addressing the elephant in the room, the pain points that many of you face when it comes to investing. First off, Time is your most precious commodity. Between long work hours, meetings, and personal commitments, finding time to research investments can feel impossible. Secondly, despite your best efforts, many of you aren't topping the S&P 500. It's frustrating to put money into the market and not see the returns you hoped for. Lastly, the sheer volume of information out there is overwhelming. The stock market is complex, and without dedicating hours to study, it's easy to feel lost. So, what's the solution? How can you overcome these challenges? Let's delve into the benefits of mastering investing even when you are pressed for time. Imagine achieving strong investment returns without spending countless hours on research. By adopting efficient strategies, you can make your money work harder for you. With a solid plan in place, you eliminate the guesswork. This reduces stress and builds confidence in your financial decisions. By taking control of your investments, you can ensure they align with your personal values and financial objectives. Ultimately, successful investing can lead to significant financial growth, helping you achieve goals like buying a home, securing your children's education, or retiring early. Imagine this: you are juggling a demanding career, family responsibilities, and personal commitments. Your calendar is packed, your to-do list never seems to end, and the idea of adding successful investment into the mix feels impossible. But what if I told you that you could build wealth, achieve your financial goals, and enhance your life, all without sacrificing the time you don't have? Let me paint a picture of what your life could look like when you invest successfully despite a busy schedule. You wake up in the morning knowing that while you focus on crushing it at work, your money is working hard for you in the background. You've set up a personalized investment plan that aligns with your values and financial goals. Instead of feeling stressed about market fluctuations, you feel confident because you have a solid strategy in place. During your lunch break, rather than frantically checking stock prices or worrying about your investments, you take a moment to enjoy your meal or catch up with a colleague. Your evenings are free for family time, hobbies, or simply unwinding from the day without the nagging feeling that you should be managing your portfolio. Over time, you start to see the fruits of your smart investing. Perhaps you noticed your portfolio outperforming market benchmarks like the S&P 500. Maybe you realize you're on track to achieve goals you once thought were out of reach. Buying that dream home, funding your children's education, or planning an early retirement filled with adventure and fulfillment. Financial stress begins to fade away. You no longer lose sleep over money worries because you've taken control of your financial future, not just in investing, but in other areas of your life. You might even find yourself sharing your journey with friends and family, inspiring them to take control of their finances too. Imagine having the freedom to make choices not based solely on financial constraints, but on what truly brings you joy and fulfillment. Want to take that family vacation you've been putting off? You can do it. Considering a career change or starting your own business? Your smart investments have given you a financial cushion to explore new opportunities. All of this is possible because you've embraced a strategic, efficient approach to investing that fits seamlessly into your busy life. You've leveraged time-saving tools, focused on quality investments, and educated yourself with strategies designed for people just like you, busy but ambitious. So, picture yourself living this life. A life where you're not just working for money, but your money is also working for you, all without adding more stress or time commitments to your plate. Isn't that a wonderful place to be? This isn't just a dream, it's within your reach. By investing successfully, despite a busy schedule, you're opening doors to a future filled with possibilities, financial security, and the freedom to live life on your own terms. So, why not take that step today? Your future self will thank you. And if you think that you can't invest successfully despite a busy schedule, I will bust 5 myths about this right now. Many of us find it hard to believe that we can achieve better investment returns without dedicating significant time. We assume that successful investing requires constant monitoring and extensive research, time we simply don't have. This belief can actually hold us back. By thinking we must invest a lot of time to see returns, we might avoid investing altogether or settle for less effective strategies. As a result, we may miss out on potential gains and fail to meet our financial goals. Our hard earned money might sit idle or outperform, all because we can't commit the hours we think are necessary. But what if there's a smarter way? By leveraging automated investment tools and stock screeners, we can make our money work for us with minimal time commitment. This means you can grow your wealth and potentially outperform the market, all without sacrificing your valuable time. It's about working smarter, not harder, to achieve your financial goals. Many of us aren't comfortable making investment decisions on our own and prefer buying index funds. It feels safer and less daunting than navigating the stock market ourselves. This hesitation can limit your investment potential. By solely relying on index funds, you might miss opportunities to tailor your portfolio to your specific financial goals and risk tolerance. As a result, you may not achieve the optimal growth your investment could attain. You might feel stuck with average market returns, delaying your path to financial freedom. But here's an exciting alternative. Learning how to confidently invest in stocks on your own through a structured, easy to follow approach. By educating yourself, you can make informed decisions without feeling overwhelmed. This empowers you to take control of your financial future, potentially achieve higher returns than standard index funds, and customize your investments to align perfectly with your goals, all while building your investment savvy. You're concerned that a set it and forget it approach won't help you beat the S&P 500, which has already been a challenge. This fear can lead you to overcomplicate your investments, constantly chasing the next big thing or trying to time the market. As a result, you may experience investment fatigue, increased stress, and potentially poorer performance due to spreading yourself too thin or making impulsive decisions. But here's a fresh perspective. Adopt a focused investment approach by honing in on quality over quantity. Learn to identify undervalued stocks with strong fundamentals using efficient analysis methods tailored for busy individuals. This strategy enables you to potentially outperform the S&P 500 by making well-informed, high-impact investment choices. You simplify your portfolio management, save time, and increase your chances of capturing those lucrative opportunities without the overwhelm. Many of us worry that by adopting a strategy requiring less of our time, we'd be relinquishing control over our investments. We want to stay actively involved to ensure our portfolio aligns with our personal values and financial objectives. This concern can lead us to spend excessive time analyzing every investment option, which is overwhelming and impractical for our busy schedules. As a result, we may become stressed or even postpone investing altogether, hindering our financial growth and not meeting our long-term goals. But here's a fresh idea. Create a personalized investment plan, defining what an investment must be to be considered. By utilizing efficient stock selection methods and time-saving analytical tools, you can make informed decisions quickly. This approach keeps you in control without demanding excessive time. This empowers you to actively manage your portfolio in alignment with your personal goals while freeing up your schedule. You maintain control, make confident investment choices, and optimize your returns, all without sacrificing valuable time in your busy life. Many of us have tried low-maintenance investment strategies, only to see disappointed with the results. This experience makes us skeptical that investing with minimal time commitment will yield different outcomes. This skepticism can lead us to dismiss time-efficient investment methods, believing they won't deliver the returns we desire. As a result, we might either avoid investing altogether or feel compelled to spend excessive time we don't have on complex investment strategies, which can be overwhelming and unsustainable. But here's another idea. Leverage your existing expertise by investing in industries or sectors you're already familiar with. By focusing on areas where you have knowledge or professional experience, you can make informed investment decisions more efficiently, reducing the time needed for research. This approach allows you to potentially achieve better investment results without a significant time commitment. You tap into your own insights, make quicker decisions with confidence, and align your investments with both your expertise and busy schedule, maximizing returns while minimizing effort. Now, we're diving into the wrong ways to invest when you're busy. I know that juggling a hectic schedule leaves little time for managing investments. That's all the more reason to avoid common pitfalls that can cost you both time and money. First off, let's talk about what not to do. A mistake I see many busy professionals make is trying to actively trade or time the market without the necessary research. I get it. You don't have hours to spend analyzing every stock, but here's where things go sideways and why it's crucial to be cautious. Investing based on a friend's advice or the latest buzz on social media is tempting, especially when you're pressed for time. Trust me, if everyone's talking about it, you might already be late to the party. These hot tips often lack thorough analysis and are based on hype rather than solid fundamentals. Jumping in without proper due diligence can lead to significant losses if the trend reverses or the information was inaccurate to begin with. Trying to score quick wins without understanding the market forces at play is like rolling the dice in Vegas, not a sustainable strategy. The stock market is influenced by a myriad of factors: economic indicators, company performance, geopolitical events, and more. Without a solid grasp of these elements, short-term trades become high-risk gambles. While you might get lucky once or twice, consistently making profitable short-term trades without proper analysis is highly unlikely. Investing in companies without digging into their financials is a recipe for disaster. I know what you're thinking. Who has the time? But neglecting this crucial step means you're essentially going in blind without understanding a company's earnings, debt levels, and growth prospects. You can't accurately assess its true value or potential risk. This could result in investing in overvalued companies, financially unstable businesses, or firms headed for a downturn. Spreading your money thin across too many stocks without a clear plan is another common misstep. Some believe that owning a large number of stocks automatically reduces risk, but without a strategic approach, you might dilute your portfolio's performance. Over-diversification can make it difficult to keep track of your investments and may lead to a portfolio that merely mirrors the market average, or worse, underperforms it, without focusing on quality and alignment with your goals. You won't reap the benefits that thoughtful diversification can offer. Remember, investing wisely doesn't have to consume your life, but avoiding these common mistakes is a critical first step toward financial success. So, we've talked about the wrong ways to invest when you're busy, but you might be wondering, what's the real fallout from these missteps? Let's dive into what happens when you do it the wrong way and why it's so crucial to avoid these common pitfalls. First and foremost, poor choices lead to financial losses that can set you back significantly. Investing without proper research or chasing after hot tips is like playing a game of chance with your hard-earned money. These losses aren't just numbers on a screen. They can impact your ability to achieve major life goals like buying a home, funding your children's education, or securing a comfortable retirement. Recovering from significant losses can take years, and that's time you can't afford to waste. Worrying about unmonitored investment adds pressure you don't need. Imagine constantly checking your phone for stock updates, feeling your heart race every time the market dips. This kind of stress can spill over into other areas of your life, affecting your performance at work, straining personal relationships, and even impacting your health. With an already packed schedule, the last thing you need is additional stress weighting you down. Time and money thrown at ineffective strategies could be better spent elsewhere. Every hour you spend trying to fix a poorly constructed portfolio is an hour you could have invested in your career, spent with loved ones, or dedicated to personal growth. Similarly, money lost on bad investments is capital that could have been allocated to more promising opportunities. Inefficient investing is not just unproductive, it's counterproductive. Without a solid plan, beating benchmarks like the S&P 500 becomes a distant dream. You might find yourself treading water financially, watching others grow their wealth while we're stuck in the same place. This stagnation can be demotivating and may lead you to question your financial decisions altogether. It can delay or even derail your long term objectives, like achieving financial independence or retiring early. Making decisions based on fear or hype leads to a vicious cycle of bad choices. Emotional investing often results in buying high when optimism is rampant and selling low when panic sets in, the exact opposite of a successful strategy. This roller coaster of emotions can erode your confidence, making you hesitant to invest in the future or prompting you to take unnecessary risks to recoup losses. It's a lose-lose situation that can be hard to escape once you're in it. Remember, investing doesn't have to be a source of stress or a drain on your resources. With the right approach, it can be a powerful tool to build wealth and achieve the life you envision, all without consuming the limited time you have. So, we've talked about what not to do when investing with a busy schedule. But don't worry, there's a better path forward. Let's dive into the right way to invest when you're short on time. Here's how you can invest smartly without sacrificing all your free time. First things first, set up a personal investment game plan. This is your roadmap to investing efficiently. Decide what kinds of stocks align with your goals and values. Maybe you're passionate about tech startups revolutionizing the industry. Or perhaps companies with strong ethical practices resonate with you. By narrowing down your focus, you save time and invest in what truly matters to you. Are you aiming for long term growth, passive income through dividends, or preserving your capital? Get clear on this. Knowing your goals helps you tailor your investment strategy accordingly. It's like planning a trip. You need to know your destination to choose the best route. Next up, use tools that save you time. In this digital age, there's no shortage of resources designed to make investing more efficient. Stock screeners filter out the noise, showing you only the stocks that meet your criteria. You input your preferences like industry, market cap, dividend yield, and the screener presents a curated list. This cuts down hours of research into minutes. Subscribe to trustworthy newsletters or financial summaries that give you the lowdown without the fluff. These sources condense market analysis, company performance, and industry trends into bite-sized pieces. It's like having a personal analyst who does the heavy lifting for you. When time is limited, quality over quantity should be your mantra. It's better to invest in a few well-researched stocks than to spread yourself too thin. Focus on companies with strong fundamentals, consistent earnings, solid management, and a competitive edge in their industry. This not only simplifies your portfolio but also increases your confidence in your investments. Adopt a buy and hold strategy so you're not constantly checking the market. Long-term investing reduces the stress of short-term volatility and allows your investments to grow over time. Remember, wealth building is a marathon, not a sprint. Don't underestimate the power of knowledge. Invest in your education to make informed decisions swiftly. Equip yourself with the strategies designed for people just like you, busy but ambitious. Online courses can teach you effective investment techniques that don't require a finance degree. They focus on practical skills you can apply immediately. Focus on proven methods that don't require you to become a full-time trader. Learn about fundamental analysis, value investing, or other strategies that align with your goals and time constraints. This way, you make smarter choices without the trial and error. Lastly, schedule quick check-ins to stay on top of your investments without overwhelming yourself. Allocate time once a month or quarter to review and adjust as needed. This periodic check-in ensures your portfolio remains aligned with your goals and lets you make timely decisions based on any significant market changes. It's a balanced approach that keeps you engaged without consuming your schedule. By implementing these steps, you can take control of your financial future without sacrificing the time you need for your career, family, and personal interests. Remember, smart investing isn't about working harder, it's about working smarter. Alright, so we've covered these strategies on how to invest smartly when you're short on time. But you might be wondering, why does this approach work for me? Great question. Let's break down how this method benefits you in multiple ways. By taking this approach, you're making informed decisions that align with what matters to you. You're not handing over your financial future to some algorithm or leaving it to chance based on hot tips. Instead, you're setting your own criteria based on your values and goals. Whether it's investing in sustainable companies or focusing on sectors you're passionate about. The sense of control not only leads to a more personalized portfolio, but also gives you confidence in your investment choices. A strategic plan ups your chances of outperforming the market. When you invest half-heartedly, you're essentially gambling. But with a well thought out game plan, you're making calculated moves designed to yield better results. By focusing on quality over quantity and leveraging tools that streamline your research, you're positioning yourself to make smarter investments. This targeted approach can help you beat benchmarks like the S&P 500, moving you closer to your financial goals. Let's face it, time is a precious commodity, especially when you're juggling a busy schedule. Efficient tools and methods mean less time spent worrying about your investments. Stock screeners, summarized research, and a focused investment strategy all contribute to reducing the hours you'd otherwise spend sifting through endless data. This way, you can keep your investment activities concise and effective, freeing up time for your career, family, and hobbies. Knowing you have a solid plan lets you sleep easier at night. Uncertainty and lack of control are major stressors when it comes to investing. By having a clear strategy and scheduled check-ins, you eliminate the guesswork. You're not constantly glued to market news or fretting over every dip and spike. This peace of mind is invaluable, allowing you to focus your energy on other important aspects of your life without the nagging worry about your financial future. Last but not least, sharpening your investment skills can have a positive ripple effect in other areas of your life. As you become more knowledgeable and confident in investing, you may find that this empowerment spills over into your professional and personal realms. You develop critical thinking skills, become more decisive, and even inspire those around you to take control of their finances. It's a win-win situation that contributes to your overall growth and success. Implementing these strategies doesn't just improve your investment portfolio, it enhances your quality of life. You're making your money work for you, not the other way around. And the best part? You're doing it all without sacrificing the time you need for the people and activities you love. If this resonates with you, Why not start putting these steps into action? Begin by setting up your personal investment game plan today. Investing doesn't have to be complicated or time-consuming. With the right strategies, you can grow your wealth, outperform the market, and still have time for what matters most in your life. Remember, the goal is to make your money work for you, not the other way around. Thanks for watching. If you found this video helpful, subscribe for more tips on mastering the art of investing, even with a busy schedule. Catch you in the next video. If you found